Hello, I'm Adam Grimes and welcome to ChartSchool. So today we're going to talk about a pattern that is developing in China. And before we do that, let's talk about how markets act around support and resistance. So a few refinements. The way people think about a support or resistance level is that a resistance level is a level that stops prices and the market goes up to the level and backs off. This is kind of how we expect things to work. And of course, we know sometimes price does go through the level and then we have a breakout, and sometimes price doesn't quite get to the level. We know a lot of things can happen there. So I want to, first of all, suggest one refinement to the way you think about this. Rather than saying a resistance level, say a potential resistance level, a potential support level. I know it seems a little bit artificial and like maybe we're splitting hairs, but if you are very rigorous about attaching that word potential to your reading of these levels on the chart, it will change the way you think about the levels. It will change the way you trade. It will automatically kick you into a mode where you start thinking in terms of probabilities. So it's a pretty good thing to do. Always think potential support and resistance level. So with that in mind, let's imagine we have a potential support level. So we're looking at a market that's coming down to this potential support level. Because we know it's a potential, we think what's going to happen. Well, a few things can happen, right? Of course, the market can just go through the level. That's one possibility. It certainly happens. Another possibility is the market just kind of hangs out around the level. Also happens. And the other possibility is the market moves away from the level. So this is the possibility I want to talk about a little bit more. This is what we call price rejection. So the market comes down to a potential level and then moves away from that level with new momentum. Basically, it's like the market gets there and doesn't want to be there. So what you're looking for when you're evaluating the character of price action around support and resistance is you want to understand, is there price rejection, or conversely, is there no price rejection? That's going to tell you two very different things. One more thought here. This is a little bit backwards looking. You might already be thinking, wait a minute, I don't know if there's price rejection. So if I'm looking, let's say you buy here, I don't know what's going to happen in the future. Is there going to be price rejection or not? You don't know. No, of course you can't know. That is absolutely unknowable. So what we're doing is, this is a tool, this is a structure to evaluate a trade that is underway. This is a structure to look at how a market is trading. And you start to put this together, you get a pretty good sense of the character and what's driving the market. So now with that context in mind, let's look at what's happening here in China. We have a potential support level. And I haven't drawn this line exactly. Let me zoom in. And a few days ago, the market came down, went through. This was a 2-day process. The first day, we went through this potential support level, and then we seemed to be holding below it. And then the next day, that's this up candle here, we moved away. So this is single day price rejection right here, but it's not very much. So once you see this, then we start thinking about, well, what kind of follow through? And if you knock these last two bars off the chart, and if you could imagine rather that we had another bar that went up like this the next day, well, that's obviously really crystal clear price rejection. Right? It's like a rubber band snapping off of that low and immediate price action. Instead, what we had is a little bit of reluctant follow through, and now we're making a little bit of a rally today. So the question is, stepping back and thinking big picture, we're in a situation and have been in a situation for many weeks where US stocks look pretty good and the rest of the world looks pretty bad, just to put it very simply. And many Asian indexes, particularly China, look very, very bad. So, we've seen, you have kind of a classic bear flag here, 2-leg breakdown, a little bit of support at the potential support level. So the question now we're thinking about is, how is this divergence going to resolve itself? There's really two big possibilities. One is the US wins and we see a huge rally in global stocks. And I've been very clear with my clients, I think that's the most likely outcome. And that does seem to be what's developing. But for that to develop, I don't think we're going to see a robust rally in global stocks unless we see some improvement in some of these Asian indexes. So this is why monitoring China for price rejection around this previous support level and this potential support level, monitoring the price action around that level is really, really important. Because if we sit here and make another bear flag and then begin a significant breakdown, well, maybe the global stock situation is not going to resolve in favor of U.S. strength. Maybe global stocks are going to collapse. I don't think that's very likely, but what would tell me that it's becoming more likely is continued weakness in China and continued weakness in broad Asia, in broad Europe, and then to see failures around the U.S. highs. That would start to really shape a picture and tell a story that could be particularly ominous for global stocks for several years maybe. So this is an important level. It's also an important concept. It's more than looking at this and say, I don't want you to come away from this saying, oh, we're going to predict what's happening in China. Well, no, we're not. But what we're doing here is taking a tool. This is one of the tools that I use all the time to understand price action and to understand where the probabilities are tilted in a market. It's a little bit of a subjective tool, but for those of you who are more quantitative and want to code things, I would remind you that just because a tool is subjective doesn't mean it has no value. This is subjective because it's difficult to quantify. There are ways you can quantify it. You can look at standard deviation moves. You can look at different types of bands and ranges off of lows. So there definitely are ways that you can quantify it. After doing that over many years, I found that the most effective use in my trading is to use it as a subjective tool. So that's my choice. You can certainly do other things with it. Last word, you may not have this particular China index, but there are several ETFs you can look at which are going to give you slightly different pictures. FXI, of course, is the big one. Another very common one is MCHI. There are some other China indexes or ETFs of exchange traded products actually. GXC is one, but when you start to get some of these others, the volume is a little bit thinner. But you still see, even though the picture is a little bit different because the different composition of the specific exchange traded product versus the index, but you still see the same ideas carrying through here. Okay, so rethink support and resistance in terms of potential support and resistance, and then evaluating the character price action around those levels can really tell us a lot about markets. And kind of a third point here, we're using all of this to try to understand the situation in global stocks. You can find more of my work at adamhgrimes.com. You also should go over to marketlifetrading.com. If you haven't seen the trading course, I have a gigantic free trading course there you can check out, and you can also see more of my analysis daily if you would like to. Thank you very much.